Hello guys, I hope you are okay that side. Well, myself, I'm okay. It's just that I've been busy. I haven't been able to give you guys a video ever since the last ones that we had on Sunday due to other commitments, but now I can give you something. So we're gonna look at Nasdaq. So like if you've been on this channel, you know how we do things here, and if this is your first video that you're watching, make sure that you watch until the end, because this is where I share the tips. I share my view or how you should approach a chart. I try and make everything as simplified as possible, and if you are interested in learning more of this style, this style of trading, you can always reach out to me on Telegram, and then you can maybe get you on the next group that's going to be starting with their classes for the next month, because currently there's another one that I'm busy with, but they're almost done. So maybe if you want to join, you will just reach me out on Telegram, and then we'll take it from there. All right, let's get started. So this is our Nasdaq. When we did analyze it, the price was here. It was on a Sunday. Yes, it was on a Sunday. We were here, and then after that we never had anything, a follow-up setup. So let's just remove some of these drawings and start at the top. So let's remove this, let's remove this. So like as always, we always start with what? Our monthly chart. You cannot just you can't call yourself a technical trader, but when you're analyzing, you just go straight to your execution time frame and start taking trades, because you are going to miss out some of the information that's there on the bigger picture. Like, you need to look at the bigger picture first before you can drill it down to the time frame, whatever time frame that you're trading on, where you're executing. Maybe you're executing on H1, you're executing on M15, M30, H4, whatever, but you first need to check the bigger structure, which is what we always do. That's why every time I make a video, I make sure that we discuss what we're seeing on the bigger picture, so that when you move down to smaller time frames, we try and see if the structure there aligns with what we saw on the bigger picture. Then we'll decide on what type of trades to take. So this is our monthly chart. Let's remove this. Is from weekly, and this one is from weekly as well, but we can keep it there for now. So this is what we have on monthly. On monthly, nothing has changed, guys. Nothing has changed. We are still we hit the monthly support, and then we hit it here, and then we bounced up there. We were hoping that it will reach at least this line, because this line is indicates what? This is where our monthly resistance starts. So we're hoping that it will go up until there, but here it turns here, and then it turned there, and then it came until there. So that's all that we have. Like, the structure hasn't changed. Our monthly support still holding. We still have space to go up there until the price can maybe go lower than this. Then we can say, yes, this on a longer term looks like it can still push down until there. But we don't predict breakouts. That's one thing. That's a mistake that you should never make, because you don't know when the trend line is going to be broken. You don't know when a support or a resistance is going to be broken. So you just trade for as long as it is still holding. You must respect it. You cannot trade against it. You cannot trade like it is not there. So that's a mistake that you're going to make, and then say that sometimes you can try and say this resistance or this trend line has been hit 5 times. I think now it's time it is broken. You cannot go like that. When the price you're trading, when the price hits that zone or hits that trend line, even though it has been hit 6 times, yes, it has been hit 6 times, but it is still holding. It is not yet broken. When the price gets there, you exit, and then you watch what happens there. Then, based on the structure that you're going to see there, you can decide whether to trade in the opposite direction or to wait for a breakout. Then you join that trend. That's how you should do it. Because if you're trying to say someone is gonna lose until they've lost the battle, then it's not gonna end well for you. So now let's move down to our weekly. On weekly, if you still remember, this is what we always put when we're moving down. At some point, this was our trend line, and then from the point when you formed this area, this one that I marked here, we pushed all the way up until there. Remember, this is when we said we were hoping it will reach the horizontal line on monthly, because that's where our monthly area of resistance starts, but it didn't. It came back, right? But when it was going up, when it was punching up here, when it was moving to the upside, it managed to go past this area of resistance, and it managed to go past this trend line that I had there. So meaning this weekly support is quite strong, because the move from it went up, broke resistance, and it broke the trend line. So which is what, even when we were making the video the other day, we said yes, it looks like we've got a chance to move up, but it might not be long term. Like, our biggest wish is that it gets inside this one, because this is the bigger structure that initiated the whole pullback to the upside and even changed the structure here. Even though we did not hit that, that's a good thing to show that the higher time frame structure than what you're looking at here is not yet in control. So we are allowed to try and hope that it will get us there, but we'll see what happens. But as things stand on our weekly chart, we can say that last week we turned somewhere there, and we failed. The other week we failed to reach that, but we're saying yes, when you're trading smaller time frames, you can get trades to go up, you can get trades to go down, but you need to understand that you stick to your time frames. You cannot trade M15 and then end up saying I'm going to hold this trade for 2 months, because of what? You are going to end up interfering, especially if you don't check the bigger picture, because you're going to end up interfering with what? The bigger structure. And if you didn't start from the bigger time frame, just to check if whatever that you're trying to do on your smaller time frame agrees with the bigger picture, then yes. If not, then you might end up going that way, while the bigger picture suggests that we're most likely to go to the other side. You see? So here, this is our wish, the price to enter here before we can get more like deeper pullbacks, or next impulse after this one. This one we can look at as an impulse, a pullback, maybe another one until that level. But it's not something that can happen in 1 week, because remember, this is a weekly chart. But we're just saying currently this is a very strong area of what? Of support on weekly. And we can see that last week we had what? A weekly bearish engulfing, which means this is suggesting that there's some bearish force to the downside. Like there was a lot of force to the downside last week. That's why we engulfed the previous candlestick. So meaning we were going up, and then this one swallowed the previous one. That's why we are saying it's a bearish engulfing. So this is some of the concepts that I teach in full details in my mentorship. So you see this, I start you from the basics so that you understand, because if I just go straight and show you how I analyze a chart, you might not understand why I put the zone here, and why didn't I mark it maybe from there like that, or why didn't I put it there. So there are the rules or the guidelines that I'll give you to show you where exactly, what to follow, what to look for when you're marking your zone, and where exactly to place the zone, where exactly to place your trend line. Because it's not just a concept where someone can just go and say, this is how you draw a trend line. Yes, I can see how you're drawing it, but what are the guidelines for me to say this is where I have to draw it? I know how to draw it, but if I draw a trend line but it is not drawn accurately, it is not placed where it is supposed to be, I might end up getting trades even where there is none. You see? So here we can conclude by saying this bearish engulfing, maybe it will be that one that gives us the last push into the zone before we can take off like that. So we don't have anything else on this time frame besides that we had engulfing, and maybe when the market opens, it will just open with a gap to the downside and then enter into that zone. That's where you can start searching for trades that are going to be maybe a bigger pullback, because this one, I did tell you that it might not be, for long term, because we are turning in the middle of sort of nowhere. Yes, there was a daily zone there, but it was not fresh. Yes, I said, yes, we can get trades there because it's a daily zone, but we must not end up saying it will just end up being which is why I was saying when you're trading on M15, try and make sure that even how you set your TPs, they must be with regards to the structure on that time frame. Because now if you start to execute on M50 and say I'm going to hold for 3 months, you might end up interfering with the structure on monthly. That's why even when we said we hit the daily zone, you can buy, but do not hold for too long, because you will end up interfering with the structures on weekly and on monthly. And we on weekly said maybe we can get a bigger pullback once we have hit this, you see. So that's why you need to check the bigger guys before you can execute, especially if you're going to be executing for long term. But if you're someone that's just doing intraday or just holding for 1 day or 2, then you might not have issues. But if you're planning to hold for more than that, longer than that, then that's where you need to check the other time frame. So let's check what we have on daily. So on daily, when we did the analysis, we were there to see the market opens with a gap there. But you need to understand that I said, where was that? Yes, we did have, I think it was on H4. We did mark this and say, because the price was there when we did the analysis, it was inside here. We said, if you were buying, if you were holding buy trades, because this is the daily area of support that we spoke about, this one. Remember, we knew that we were hitting the daily support, and we even had the engulfing, and then we took off until we got to that area, right? And then we said, if you are holding your buy trades, you manage to get buy trades here, this is where you can maybe exit, just leave one trade running. Because remember, when you are trading, you need to have a target. You can't just say, I will hold, I will see how far it can go. You can't do that unless if you've got more than one trade. Then you will say, yes, I'm holding these ones. Maybe if I have 3 trades, I can say these 2 I've got targets. The other one I'll just be trailing my stop loss. You see? So when we made the analysis and we were inside there, we said, based on what you're gonna get here, if you get a breakout, then we are most likely gonna go what? To the next, I always say this, next opposite structure. In this case, this is your next resistance. So meaning if you get a breakout there and then you get a reason to buy, you'll be targeting the next resistance. But we do not make a mistake of saying, because we managed to break this one, then we have to break the next one as well. No. When you hit the next opposite structure, all you have to do is to exit, and then you watch what happens there. Based on the structure, you can decide whether you're going to take trades in that direction, or you can wait for it to break and then maybe a pullback. You'll be targeting the next one after that one. You see? So in this case, we just moved up to exactly to the next one. Let me just mark it for you so that you can see what I'm talking about. So that's why I'm saying you must never trade against a certain structure because you feel like it might be broken. Because if it's not broken, then you are in trouble. Yes. So there's your what? This is the resistance that I said. Should the current one be broken, then you'll be getting buy trades and targeting this one. You can see we just touched it and then we turned exactly at the zone. Even marking it, there are guidelines, there are rules. We don't just put it anyway. And that's what I teach in the mentorship. And then after tipping that one, we just went down until where? Even if you had gotten reasons to sell there, you need to know that you are targeting what? You cannot hold and say, I'm going to exit at 10,000 price. Yes, the price can get there, but now why are you neglecting every structure that the price created when it was moving up? Which is why we always talk of what? The next opposite structure, and then you exit, or maybe you can exit most of your trades, and then you keep maybe one running. There you are just trailing the stop loss, because there you're just saying, should this structure be broken, I'm in. But you can't do that if you only have one trade. So in this case, what happened was that if you are getting trades there, the next opposite structure is the very same area of support that gave you this strong move to the upside and broke these areas of resistance. So you see, that area of support did something, which is why you cannot just ignore it, this one. So once the price hit it, it reacted. You can see we have one, let me just try and zoom in. It reacted with this candlestick there, but it did not, it failed to keep, the momentum. So the bulls, yes, tried to come in at their area of support, but the bears defeated them with what? Strong candlestick to the downside, forming what? Bearish engulfing, which is the same as what we are having on what? On weekly. If you still remember, we did have a bearish engulfing on weekly. We said we had the bearish engulfing that might end up giving us a pullback into the zone before taking off. But we'll see about that. So on daily, we did have the same thing, which is what, when you get to a support, you expect the bulls to be very strong there. The bulls more than the sellers. But if you look at the force that the sellers came in, hey, they were very strong. So that's why this was just a market pause. And then they continued to the downside. And they even broke their support. The very same support where we're saying it's a support. We expected the bulls to come in strongly and defend their zone. But here they didn't. They really tried, they tried. But they got defeated. So currently on your daily chart, it's the bears that are in control. And now because this was our low, and now we are having a lower low, then it means we have to think of what? Bringing in a bearish trend line to sort of mark this move that we're having to the downside, so that we know exactly where our trend line is at. So it means on daily, the bearish trend line that you're having, you're going to put it somewhere there, right? So it means now Even on daily is still very much bearish. You can try get your trades to go to the upside, but yes, I understand you're having what do you call this, a bullish rejection candlestick, and we did close. I mean, no, we didn't. If you look at this, yes, this was the lowest point. This was the lowest point. We did break it, but we failed to close below. Maybe we can say yes, the level is just being undershot. We just went lower than it, but failed to stay there. So maybe this bullish rejection candlestick can end up we don't know. It can do this. It's very possible until this point. So if you're trying to buy, you can see you don't have enough space, because whatever this is, it can still reject the price into. Remember, this is our biggest target. So we are saying currently, if you happen to get maybe let's say you're trading your M15 H1 there, and you get reasons to go long, you cannot go long and say I'm targeting that. Yes, it's possible, it can happen, because of what you're having this sort of a bullish rejection candlestick around the support that has just been broken, but we failed to close below it. But if you get a buy, make sure it's just an intraday type of a thing. There you exit, because this might end up just being something like that, or even from where we are, we can still dip into this. So this is where you're going to find more buy orders, or more what you call this, liquidity, buy liquidity, if I can put it like that. So this is where you're going to find what price is going to be higher chances of being rejected for good and go up, something like that. So but currently I don't think you are in a position where you can talk about taking a buy trade and hold onto that for 3 weeks. Yes, it's possible, it can happen. This is a Nasdaq, but if you know that trading is a game of probabilities, the chances of that happening, they are quite slim. It's possible, yes, because nothing is 100% guaranteed. But if you make your decision based on the structure that you're seeing here, we can see that the bears are still not defeated. They're still not defeated. At least if you can get the bears if they can get there, at least you'll be having a backup. If you're trying to buy for a long time, you'll be getting backup from what? Those buy orders on the weekly zone. That's where you find strong bulls at the higher time frame zone. Maybe that's when you can defeat all this, whatever the sellers are trying to do, and even this trend line that they're building on daily, you can maybe defeat that. But currently, if you are turning here, you don't have any backup. There is no any backup, because the bulls that are here, yes, they are there, but they have been defeated. Yes, they tried to bring the price in before the thing closed, but that's not very convincing. That's not convincing for you to go and hope that it will do that. It can do that, but no, I'm not very convinced. So this is where you will feel much safer when you are buying. So let's keep this picture in mind as we are moving down to H4 and maybe H1, so that we can conclude our analysis. You see, this is how I do the analysis, because I don't want to rush through things, because if I just open this and then tell you what my conclusion without even running you through what I'm seeing, why am I saying that this is gonna happen or this is most likely gonna happen, then you might not understand. Which is why when I teach, I make sure that I give you everything here, so that when I'm making a decision, then you say, oh, I think the reason why you are saying that is because we have this zone here, is because we have this type of a pattern, is because we have that, or it's because on a higher time frame we saw this. You see, that's why I'm teaching you everything from scratch in the mentorship, so that you are ready to come up with your own setups, because I don't want to open a group where I'll be giving signals, because anyone can have a bad week. So it means if I open signal group and then I have a bad week, you'll start calling me names, scammer, this, that. No. So that's when I'm like, no, I would rather focus on what? Empowering you guys, giving you the knowledge, so that you come up with your own, you are in charge of your own money. I don't want to manage anyone's money. I don't want to blow anyone's account. You see? So now I give you the knowledge, the confidence, so that you can tackle the market. It doesn't matter whether you are someone that likes the stuff on derivative account, the broker, or you are someone that trades the indices, or someone that trades currencies. It doesn't matter. You just have to pick whatever that you like, take the knowledge that I'm showing you, go and apply it there, and have patience and also confidence, because I have a guy in group 1 He's very good at analyzing, but some here and there he still gets scared to execute. When you say, what if this happens, what if this doesn't happen? It's you will never know until you execute. Pull the trigger. You have applied the rules, you have applied risk management, pull the trigger and then put a stop loss and then just watch. Even if you don't watch that, as it is moving, you can now shift your chart to something else. Focus on that and allow the market to play out. Because if you're just standing on the sidelines and say, hey, what if, you're not going to go in. Should that price move in your direction, you're not going to forgive yourself. So that's something that you will come with the time. But if you have the knowledge over time, you will get the confidence, and if the knowledge is there, then you will make the money. You don't have to execute every day. You don't have to execute every hour, because I understand some of you have got like 9-to-5 job like myself. So you don't have to. Trading is not something that you should always be in front of your chart. You can just focus on the time frames that will allow you to have a life outside the trading. You can still do other things, just execute on H4, and then you are just checking your charts maybe once or twice a day. That's it. So this is all that we are having on daily. Let's check what we're having on what? On H4 quickly. So on H4, we can see that's when you touched that daily area of what? Of resistance, and I think there was some news or fundamentals that came out. And then based on the location, you being located inside a daily resistance and whatever, I don't know what news were there because I don't follow fundamentals that much. And then the price reversed from there. This is where the bulls tried to, remember when we had that one small white candlestick on daily, it was here. So this is where they tried to come in at their support, but it was not it was not enough, because even if you look at the candlestick that they are forming, it is not very convincing that they are going up. But if you look at the sellers when they're coming down, if you look at this, yes, here you can see that the sellers are very aggressive, they're pushing down, but the bulls, that's where you tell that whoever that is pushing in this direction is not fully in control. The opponent can still come in and reverse whatever that they're trying to do. Because when I'm in the trade, I want to see, if I'm in a buy trade, I want to see bulls giving me candlesticks that look like that. That's when I can say, yes, they are in control, they are pushing up, my trade has got higher chances of working out. But if they're just moving with these tight candlesticks there, it's not a good sign. So that's where you need to make sure that you always have a stop loss in place, or you know when to sort of move it to break even. So here we can say that it's just that the price action doesn't look that nice, but we can try, and it is not gonna look nice. I can see it already. Let's remove this one so we know what they are from a different time frame, from a daily. So we can put this from here and then draw it like that. You can see it doesn't look nice because of what we had here, sideways move. If it was moving up and then back, we will have a very nice trend line. But because we're sort of moving to the side, but it is what it is. We are outside this trend line, and the nearest resistance that we have is this one, and it seems like we are missing. Remember, this is what? That weekly area of what? Of support. That's where we wish that the price, but remember, this was the old area of what? Of support. And now we broke it and we are coming just around it. We might, remember I said, when the market opens, it might just, I'm not saying when the market opens, you should just go and do what? And sell. But because of what it did on Friday, it might just have one last move into the weekly support before having that strong move to the upside. So that's all that we have. I don't think it's necessary for us to check what? To check H1, because what I can tell you is that yes, this if you're looking at this H4 trend line, it is broken, but we don't yet have like full back up that will push the price very high to the upside, because of what we haven't touched that pool of big guys at the support on weekly. Maybe if the sellers can just give us, please, if they can just give us this is not something that I would do selling. I wouldn't do this because you're too close to the support now. So you can just wait for a couple of hours. Maybe the sellers will push into this. Then when you're getting confirmation from anywhere here inside of that weekly support, that's when you can take your buys with what? With confidence, because now you've got a sort of a backup from your weekly support, then the buyers there, you expect them to be very strong and defend that big zone that they have there. But currently, it's very risky. It's very risky to take a buy to the upside, especially now. I understand the trend line has been broken, so you can do that, but make sure you do not do it for what? For long term. Maybe if you just say, I had something there that's been broken, and then I can just mark this and say this is where everything started. Should the price get in here, I'm going to buy maybe until whatever that was happening there. Don't try and trade past that point, at least until the price gets this. Once the price hits this, whatever this is, remember this is that daily area, whatever this is, once the price hits that, you exit. Should it be broken, at least now you know this is opening more space until you can touch that. You see, you've got more profit margin. Should you get a pullback, then you just mark a support and then you target that, because this will have been broken. But you cannot just buy from here and say I'm targeting that, because the sellers are not yet out. They can still defeat you from that. You see? So I think I'm gonna end it this one here. So this is what you can expect from Nasdaq from Monday until Friday. Maybe I'll try and have a follow-up setup maybe Tuesday or Wednesday. But for now, this is all that we have. And then don't forget to like and subscribe if you haven't done so. And then I'll see you in the next video. Thank you.